Hi everyone, let's go over my highest probability Elliott Wave scenarios on Bitcoin on the medium time frame, the low time frame, micro and the local time frames, including some extras as you can see. Starting with the medium time frame, where we are still looking for more downside in a three-wave structure WXY, potentially a double zigzag to the downside, where then wave W is a zigzag in an ABC, followed by any corrective structure and then a wave X for then continuation in a wave Y, where the target currently for a wave Y, taken from the high to the low of W to the current high over here of wave X, is between the 1 and the 1.236, sitting between 21.7k and 20.1k. Now in this particular scenario, this wave X already hit the 382, which is a minimum target for a wave X, so it does not have to go higher for a wave X to be valid and find more downside. And in a potential double zigzag, what you prefer to see is this trend line to be broken. This is a trend line taken from this high to this high and then extended to the downside. You can see it has been tested for a third time, but preferably what you actually want to see in a double zigzag is price to continue ranging, breaking the trend line and then moving towards the downside. Another reason why more downside has a higher probability is because price over here created a double bottom, and double tops and double bottoms are like a magnet for price. And on these time frames, it's very interesting that we have a double bottom here, and it definitely increases the probabilities that we still have some downside to go. And also on the Bybit chart, this low over here has already been taken with this candle to the downside with quite a wick indeed to like 23.6k. And usually based on statistics, all of the charts will eventually then take the same low. All the charts are then aligned and then we can take it from there. And also the fact that the Bybit wick went all the way into the 23Ks makes me think that usually you would fill that whole wick and at least go to 23K, if not lower, for a potential target of wave Y over here. Now the first psychology scenario I like to share with you, which is like a bit of an extra, because many newer traders, of course, like in retail, they like to use patterns and trend lines. And I always like to think of fake out, because in the end, of course, most people lose. Now, one of the things over here is this trend line. This is the same trend line which I just mentioned with the double zigzag scenario, where I would like a fake out, where you then have the breakout traders that trade trend lines over here. Now, by the way, I know people that trade trend lines very successfully, though they have a solid plan and strategy behind it. But the breakout traders would be looking for longs, and what I would then like is to get a move towards the downside. And the second psychology scenario here is a head and shoulders pattern, where eventually the neckline is broken, but instead of going to the bottom over here, the target being about 17.7k, we don't go all the way down here, but instead we reverse halfway or wherever, of course, for then continuation to the upside. Another thing which is interesting is that over here I pulled a volume profile of this range, and the value area high has been tested once, has been tested twice. The more often you test support, the weaker it becomes, and you can imagine if price finds its way down to the value area high, probabilities are increasing for price to enter the value area over here. Now, once price enters the value area, potentially with a retest of the value area high, probabilities really increase to hit the point of control at least 23k, if not the value area low over here at 21.9k. If we then go to the low time frame, I'll move to the 4 hour, and then this is a potential scenario for wave X and then a bigger WXY to the downside. This scenario was first thought of by KG in Discord. Make sure to check Discord out. Great Elliott Wave counter, great scenario, and here it is on my chart as well for the past week, where in this scenario we're then looking for a triangle. Now, a couple of rules that are important to keep an eye on. First of all, 4 out of the 5 waves have to be a zigzag. So A, B, C, D, E, a 5-wave structure. 4 of these have to be a simple zigzag structure and then a 5-3-5-wave move, right? If there is a more complex wave, it tends to be C, D, or E, because then one of the zigzags that is not a zigzag, right? One of the waves that might not be a zigzag tends to be wave C, wave D, or wave E. Most commonly, C, D, or E is then a double or a triple zigzag. So it's still part of the zigzag family, a double zigzag being an ABC zigzag correction and then another one over here. And the triple one is of course correction and then a third zigzag to the upside or the downside. However, you could also see a triangle in C, D, or E. So a triangle in a triangle, but that is definitely more rare. Another important thing is that we want to see the volume going down as the pattern is evolving, and at the moment from the highest volume peak that we have in this wave A, you can see that the volume has been going to the downside consistently, which is what we want to see, which is also the reason why it's interesting to keep an eye on this particular scenario. Now in this scenario, we're talking about a running triangle because wave B went below the origin of wave A being a zigzag, then we have B, C, and eventually now looking for D, and then a potential double zigzag scenario on the lower time frames here as well, where for D, the most common target for wave D is between the golden pocket and the 786, which is over here between 25.9k and 25.4k, for then a bounce to the upside in wave E. And because wave D over here then looks to be the more complex structure for wave E, we can expect a normal zigzag structure. Now you also see the invalidations, the invalidation over here at C and the invalidation below at B. You don't want to see price doing this in this particular scenario, and you also don't want to see price going above this wave C. Now what is common in a triangle is that wave E either goes above the trend line, the AC trend line, or does not reach the AC trend line and goes down before hitting it. Now my preferred scenario usually is that we cross this trend line, the reason being that then you get again the breakout traders trading this triangle and then looking for a move to the upside, but instead it is a fake out, it is a wave E, and we are looking for downside. Now what is also interesting in relationship to this triangle scenario is the bearish CVD divergence over here that we have between the high of wave A and the high of wave C. Lower high on price, higher high on the CVD chart. So there is absorption of market longs over here by a bigger short position, which could eventually push price towards the downside as well. And it would even be nicer if we get a wave E to the upside and also have bearish CVD divergences between this high of C and the potential future high of wave E. If we then zoom in to this scenario over here and we go to the micro count that I have, then over here we are looking for a three-wave structure to the downside and then a double zigzag scenario for then that wave D, right? And eventually looking for E to the upside. So in this scenario, we then have an ABC zigzag in wave W, looks very three-wave-ish over here, a very shallow wave X reaching the 0.3 Fibonacci taken from the high to the low of W, which is a target for wave X in a double zigzag, for then eventually a three-wave to the downside in a wave Y, being a zigzag as well. So a 5, 3, and then a 5-wave structure. Interesting resistance above price is this blue box over here between 26.5k and 26.6k. An interesting support down here for potentially the end of wave Y and therefore also wave D is between 25.7k and 25.9k. And I specifically say wave D because if I open that scenario, you can see that the golden pocket over here for a potential target of D is right on top of this target box as well, which is indeed very nice confluence between the technicals and also between Elliott waves, or with Elliott waves I should say. Now if we then zoom in to this structure over here, you want to see a 5, 3, and then a 5-wave count to the downside, meaning from this low we want to count 3 waves, and this being a corrective structure. So if you then go to the local time frame over here and we zoom in, this is what we are then looking for. 5-wave move to the downside in a wave A, for then a 3-wave structure in B, and eventually a wave C to the downside. And this is a scenario that I mentioned earlier today, which basically is this scenario over here from basically the first video today, where we were looking for a move to the downside, hitting this target box over here, potentially if we get some proof of support, looking for a move to the upside, where then an interesting area of resistance is this target box over here, as mentioned, between 26.5k and 6k, for then eventually a return back towards the downside, looking for that bigger support area around 25.8k for then potentially the low of that wave D. Now, as you can see, price moved towards the downside, hit the blue support area over here, found support, and at the moment we have a bit of a bump towards the upside. And if we open the CVD divergence folder that I have as well, then you can see that continuously throughout the day we had bearish CVD divergences building. It all started at the beginning of the day over here, price moving down, and then eventually over here each little bump towards the upside 1, 2, 3 times was met with bearish CVD divergence, lower high, lower high, lower high on price, but consistently higher highs on the CVD chart, which looks like this over here. So on the CVD chart, I shall go to the 5-minute over here to make it more clear. We continuously had bearish CVD divergences. Keep an eye on the blue line. But first, lower high price, higher high on yellow, higher high on blue. Bearish CVD divergence at the high. Then eventually over here, lower high on price, but we have a higher high on the blue line over here. Bearish CVD divergence. Again, lower high on price, higher high on yellow, and on blue, more bearish CVD divergence. Lower high on price, but then again here, a higher high on the blue CVD, and not a higher high on yellow, but only on blue, we had more bearish CVD divergence, price again moving down. And now what we see is a bit of a push towards the upside, which is interesting because now we are breaking the trend of the bearish CVD divergences. And what I would like to see preferably is that if we get a retracement, that's of course an if, to also see some bullish CVD divergence, or we just continue pushing to the upside and potentially stop out all the shorts that have been accumulated throughout this trend towards the downside. So then the stop losses of the short positions that are positioned above the highs can be the fuel to then continue towards the upside. However, at the moment, my main areas of interest is this target box over here and this one here below, and this was very, very nice indeed, some good reaction. And if we actually go down to the 1 minute just to see what's been going on, this is the low of the move. There was not really any CVD divergence with this low in particular. We did have a divergence with this low, but that is absolutely minimum. I don't expect anyone to really trade from that, and that unless you're like a scalper, for example. I prefer to use CVD on at least the 5-minute, but preferably the 15-minute myself. So let's wait and see how this develops, and potentially it will follow the plan very nicely indeed, for then a move down, a bounce, move up, and eventually continuation down again. That is the general idea. If, however, over here we continue building bearish CVD divergences, imagine a move down, a move up, a retracement, and bearish CVD, of course there's not, like always, the possibility price is just going to do that. There's no guarantees, there's only probabilities, and you need a solid plan with entry requirements and always stick to your plan. Now in this particular scenario, eventually we expect price to go down as well. If we then finally look at the probabilities and I zoom out, well, basically, the probabilities are the mentioned scenarios. So go back and go through the video if you want to know the highest probability Elliott Wave scenarios at the moment on the medium time frame, low time frame, micro, and local time frames. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.